falling from 43 to 36 in the second quarter of 2010. The RMB BER business confidence rebounded to 47 in the third quarter. The third quarter rise lifted the index to its highest level in 2.5 years. Joining me in studio now is Chris Harmse. He's Chief Economist from Dynamic Wealth. Chris, thank you very much for your time.
Thank you, Brother.
Well, let's look at that trend, 43, 36, 47. And perhaps the burning question is why we saw 36 in the second quarter. What has changed dramatically in the economy to improve business sentiment from the second quarter to the third quarter?
Bronwyn, I think somewhere along the line, some confidence amongst wholesaler retailers and even from the motor car industry improved. It must have improved, or else we wouldn't have seen this rebound. We know in the second quarter, economic growth came down considerably, lower than expectations to the 3.2%. So one could maybe attribute that to consumers as well as businesses starting to feel that the economy is attracting again downwards. Now it seems though that more confidence is coming to the front. One reason may be the stronger rand, that they feel that this rand is strong, is going to stay strong for a long time to come, and also maybe that consumers as well as wholesalers and retailers also have seen over the last 2 months that the inflation rate came down considerably, starting to discount maybe a drop in the interest rate, which definitely will lead to more sales, wholesale, resale, retail as well.
I just want to pause on the rand for a moment. I mean,
yes.
Everybody is shouting about the stronger rand and pointing out how detrimental it is for South Africa's export economy. Now, with the rand at current levels, we hit 712 on Friday. Is that really a positive for business confidence out there, the strength in the rand?
I will say not so sure for on the wholesale trade situation, because if you look at an index that consists out of the 5 different parts, if you look at from the retail side, if you look at durable consumption, definitely there will be a higher demand for furniture, etc., due to the stronger rand. Also, of course, the petrol price that came down, that will have an effect on consumer confidence. That will have an effect on motor car sales. So maybe it's the way that the index is structured. It doesn't talk to big business. It doesn't talk to the miners. It doesn't talk to the exporters. It concentrates on, of course, on consumers, on motor car sales, and then on manufacturing and those parts.
Are you surprised at non-durables being under pressure, the likes of food, or remaining under pressure?
No, I'm not surprised, because if you look, there is now a tendency, and we've seen it in the inflation basket as well, that food prices are starting to increase again. Year on year, we had a very high base last year. The food prices came down considerably, but there are very strong indications now that food prices are starting to pick up again. So I'm not surprised that part stays under pressure.
Manufacturing was one of the subsectors that ticked up from 28 to 30, but still way below that 50 level. Do you think we're going to see that situation turning around anytime soon?
No, I don't think so. And one must remember, although everything improved, we're still less than 50. It's like a student getting 32 for his test, now he's getting 38. It's improvement, but he still fails the test. And one just have to remember that. I'm still concerned about manufacturing, because it's in manufacturing where things like the stronger rand, exports, the strikes will have an effect in the next measurement, which will be for fourth quarter. I still believe that's going to stay under pressure, and I'm afraid we may see with the next measure this thing coming down again.
So we could go 43, 36, 47, and now back below 40 again.
Below 40.
Could it be that dramatic in your opinion? Fourth quarter, could we go back below 40?
I still believe so. I still believe that will come back, because we will see a downward movement in economic growth.
Could the magic ingredient be another interest rate cut from the South African Reserve Bank?
I believe so in certain aspects of that index, especially new motor car sales, durable goods sales, and consumer confidence index. That's a part of that index. May keep that thing a bit higher for the time being. But I think at the end of the year we will see a contraction, because we will see a contraction in economic growth before the end of the year.
Are you one of those siding with an interest rate cut on Thursday of 50 basis points or perhaps even more?
Yes, definitely. I think even more. We still believe that we're about 6 months too late. We should have had it already. We can no longer ignore the fact of lower economic growth and the fact that we've lost more than 1.2 million jobs since the recession.
Would you call then for 100 basis points on Thursday?
I would have called for 100 basis points.
If we only see 50 basis points coming off now and then 50 basis points in November, would you be satisfied with those moves on the local interest rates? Or again, are you still pointing to further cuts needed this year?
I think 100 points this year would be in order. I think the downside risk on the inflation is enough to consider 100 basis points. I would like to have the effect immediately now, but if it's in 50-50 slots, it will be fine, but I see at least we need 100 basis points.
What are the consequences for the economy if the South African Reserve Bank Governor Jill Marcus does not cut on Thursday?
I think a large disappointment. I think definitely the labour unions will get on the bandwagon. I definitely will see that the rand may strengthen even further, although we've seen a cut also have strengthened it. That's this dual monopoly that we have at this stage.
It may just see a temporary knee-jerk reaction, having spoken to David Gracie earlier. If we do see a cut, the rand will weaken slightly and then recover after that knee-jerk reaction.
It will recover due to foreign risk appetite. After the South African economy starting to grow again, we will see foreign portfolio investors coming into South Africa, and that will definitely have a positive effect on the rand. And this is what happened the previous time. But definitely a lower interest rates now will be the spark that we need now to get consumer confidence up, and especially to get our credit and our money supply data up to the normal level that they should be around 7%.